I wanted it to go on for half an hour, but I never achieved my goal. Okay, so give us a second. We'll try and find Azad. I'm going to do 1 hour right now that would take us through to quarter past. And I hope you are bringing your abundant mindset and not your scarcity mindset so that we can really focus on solutions. So Azad, I'm now going to make you co-host. Normally takes a few seconds to propagate. Right. Azad is now speaker and co-host. Azad, can you hear us okay?
Yeah, I can hear you. Can you hear me?
Awesome. You recording okay?
Yes.
Okay, awesome. Let's bring some people up.
Okay, just bringing in a few people. All right, let's start with RHS.
Yeah, thanks for having me here. And Simon, great presentation today, as all the previous ones. Gives a very complete look at the situation and what you're suggesting, and I'm completely aligned with it. The question I have is an issue that you raised today, and maybe before as well, and during the bidding process, where the risk really is a cash offer coming in. And I just want you to elaborate a bit more about, you said that it's really Celsius as a company that can decide whether they take that or not. So that sounds a bit scary in my view, that, that is something that is, in their control. And is there anything that we can do in order to not let that happen?
Yeah, I can't give you legal advice, and I haven't actually got the advice on this yet because I just haven't had time yet. But there's only two ways I know. One is to create an incredibly compelling bid plus reorg, and let's not get too negative about it, because remember, Voyager did actually choose the bid plus the cash plus reorg approach, and so we do have a success model that we can model here. So I'd say that's one thing that we is in our favor, that at least we can say it's happened before, and therefore we can try and do it again. And remember, all the players are the same people. Kirkland is representing both, and so one would hope. But we also need to make sure that the UCC is pushing for what they want. From what I can see, they have adjusted the process to allow for the type of structures that we're looking for. And therefore, we just need to make sure that the perks, the value, the funds, everything is just so out of the water above what a cash bidder can, that there's absolutely no justification why they could take it. And the other thing is deciding whether we want exclusivity extension or not. Celsius will be applying to extend that exclusivity. Maybe if the UCC has adjusted the process enough, that we know that this is the structure, because before they took the opinion that they don't want 10 different plans. But maybe if we could give them a suggestion for structure, maybe they'd be more open to that, and then it could move into that process. I don't have the exact answer for you right now, but I think everybody should be thinking about the game theory, which one gets us the result that we want. And at least you have one company that makes that commitment, and we'll be demonstrating all the technology and how this type of thing can work. We've asked our devs to put it together in the next 3 weeks, so that everybody can understand exactly how this looks. But yeah, you're right. That is the risk. The risk is that. And so those are the only things I know how to do it. And I implore the community, any lawyers, any strategists, to discuss what they think the best approach in order to make sure we end up with what we want.
Okay, next speaker, Celsius Loans.
Hey, go ahead, Tom. I always usually go first or second anyway. Go ahead, Tom.
Tom, if you can hear us, you're next.
Thanks, folks. Real quickly, I'm not quite understanding the play that Celsius may still have in this ongoing conversation. So they have an opportunity to still present an option where they maintain a meaningful role in Celsius going forward?
No, Celsius currently has exclusivity, which means that they can present a reorg or they can accept a bid. They can decide on that. My opinion is that Kirkland wants to put it through a bid process, but the strategy that's normally been used, if you look at the Kirkland playbook in the past, is they pretend that they're going to do a reorg, they present a plan for a reorg, but then they really put it in the bid, and then the bid takes all the liabilities away, and then they can tell everybody they succeeded. I managed to get all those liabilities to disappear. Everybody found a new home, and it got out of Chapter 11, and then they can go pitch their next client and tell them what they did.
Okay, I think I got it. Thanks for letting me know. I'll have to process that a bit.
Again, these are all my opinions. It's just based upon really studying the game theory and really looking at all the different players and trying to figure out how do we put something together where everybody wins. Because if everybody wins, no one's going to feel screwed. And that's really the key to how I think we get out what we want.
Okay, let's bring on Norman.
Hi, gentlemen. Hi, thanks, Simon, for doing this. Wow, what a project! This is interesting. It's an amazing, amazing project that you're put together there. My question is, who do you envision as a fund manager? Do you have anybody in particular in mind? What kind of characteristics or experience is needed to do for somebody to do such a thing? And just another comment after you answer.
Yeah, so I got several people that I think would be appropriate. There are, for example, we could do a capital raise where in exchange for investing in the capital raise to win the bid, they actually get to manage the fund as well. So that's one structure. And that could be someone experienced that actually does investing. It could be, a very experienced crypto blockchain fund manager. There's a few of those out there. We co-invest with them regularly. So I think there's the types of people that would put their CV in. If it was somebody from TradFi, then we could have a TradFi that would bring their experience. We've got TradFi people that would look at such an opportunity, and then we can combine it with our crypto knowledge. So if BF Global was involved in the process, then we could combine our efforts and try and combine TradFi with our, I think, the most experience in the market in our company than anyone, having been involved in so many deals. Or we could just go out there and maybe the community knows somebody that would like to do it. There's also other models. You could just say, let's not have a fund manager. Let's just go for example, at Bank to the Future, we have a 0 and 5 model rather than a 2 and 20, which means that there's no active management and the assets just are not actively managed. The problem with that is that you can see with Celsius, there's no legal representation because shareholders paid zero. And so therefore there's just a pass through. They sit on the assets and they think the assets are just going to do themselves. I believe that by paying a fund manager, you're going to get a bigger upside. So I would advocate for that. But if we want to just be cheap, we could go for a 0 and 5 model, or we could go up to something that gets us. Well, if they're good, then they're meant to get us return. If they're no good, then you get rid of them.
Okay. Thank you for that. I'm happy to see someone like yourself who's been around for decades, as you've said, and in the field that we're in. And I don't know anybody else that couldn't troubleshoot this kind of a project than you.
Norman, I was born to do this. I literally wrote.
It sounds like it.
The model that I've suggested, I actually wrote it in a book in 2011 called Bank to the Future, and it said how you combine these technologies into the future to separate custody accounts and investment accounts to get towards sustainable banking when the government starts issuing money direct, which is called central bank digital currencies, and you need digital currencies in order to have freedom as the world moves towards communism, as a result of hyperinflation, downgrade of credit rating. If you ever get to read that book, sorry, I'm not shilling it. You can have it for free as well. I can get a downloadable PDF. But it literally, I'm kind of amazed at how we have an opportunity to actually create that. And that's how I got into this shit in the first place. I was trying to create a bank. We went broke in the process. And my wife, persuaded that we took our last bit of credit card debt, flew to the first Bitcoin conference, and bought our first Bitcoin at $3, which changed our life and started investing in the industry. So I feel like this is very guided. I feel like this is meant to be. And if we can get out of this process together, I'm really excited about what we could create together. Thank you.
Well, it's great that there is that we are in a sort of a low, winter, if you will, because the upside looks great. But that's all that said. I hope you get a little competition so you can fine tune your offers. Thank you.
Absolutely, as I always committed to. When I originally started this process, I originally said, and I gave the plan, a plan to Celsius, but obviously there was a lot they were hiding, so they couldn't implement it. I then went around and tried to find people that were willing to do a bailout, but then they all wanted to end up bidding. And I said, well, I'll create a structure. And then I realized that the only way to get in this game is to do the bid. So I presented the strategy, and hopefully we can create the parameters whereby we've got other, I'm shareholders in over 100 different companies that might want to do this as well. So I just want to make sure, as I said, the original commitment that I gave to you, if you go back to that webpage, I think it was banktothefuture.com/Celsius. It said, here's the 3 steps that we're going to go through. And we've been through them over the last 4 months. And I said that I have a manifest, which is depositors first. The moment that I started hearing the stories of all the people on all these spaces, and all of the traumas that they've been going through, I've stuck to that manifest the whole way. And I hope that the blockchain and my actions and everything leads to a congruent story, while other people have been saying one thing and doing another. Okay, next. Thank you.
Celsius Loans.
Hey, thanks, Simon. Thanks, Azad. Simon, great video on YouTube. Yeah, I'll just hit on just from speaking with bankruptcy lawyers this week that they think that there's never been a bankruptcy case, I think, where the debtor has not been granted exclusivity. So unless something is going to change, I do foresee that happening. And I just want to reiterate, I do not think that Celsius intends for a standalone reorg. I share your sentiment, what Kirkland & Ellis's strategy is to do. And even if there were to be a standalone reorg, I think that trust among Celsius, the overwhelming majority of Celsius creditors, not to mention future potential customers, that level of trust has been completely broken, whether it's across people who've been liquidated with their loans, whether it's been the past 4 months, a total complete near blackout on communication, or a prior CEO popping into Twitter spaces to argue with depositors. Your YouTube video that you just did, I think that was your best one yet. I think you're tying everything together. And I would just say that you've got to be very careful, because there are borrowers that wanted 100% of their collateral back and now are thinking about exchanging that claim on collateral for this equity in the new fund. So there's a lot of excitement with that. I just love to see some of the best Celsius employees that also left their funds on the platform, like yourself, that there would be some type of collaborative effort to bring this best Celsius employees over into a new co-reorganization. But thanks a lot for the time. Great video. Azad, if you could just, or Simon, if you could just take the slides from the YouTube video or send that PowerPoint deck, tweet it out. That's great for people for reviewing of the slides. But thanks again.
Awesome. Yeah, once we're done, I'll try and put together a little document, because the slides are kind of just designed to be visual stimulus. But yeah, we'll put something together. Thank you so much for that feedback. And yeah, I mean, if as I said, if we've got if there's a US company like Salt, a non-US company like Bank to the Future, we've got the brokerage. Then if Celsius employees want to come over and work on integrating that Celsius technology with Salt and BF and putting BF identity in the center, then we would love to go through a screening and interview process. And we got to double the size of the team. This is a much bigger. This is a much bigger mission. So it's going to require a doubling up of the team and resources. And I think that's a part of the process as well. How many jobs are going to be lost or maintained? But yeah, I share that thing. I would not want my investment and my ability to fill the hole bet on a company that's lost all trust. It doesn't mean that the people are bad. The talent can come over, but trust is the currency for our recovery. If we want to fill the hole, we've got to come up with a trust structure and incentive structure. And this whole process is what we've done in our business model. When investors make returns, they stay. Give them their funds when they want their funds. They come back, because securities is a long-term investment together, where we share the journey, disclose, and make sure that you've only got a suitable amount of risk. And then the original vision can be fulfilled, and let's create it together.
Okay, next speaker is Stephen.
Okay, hi, can you hear me?
Yep.
Okay, I just two things. Simon, videos are amazing, taking what's very complicated, breaking it down into simple steps that probably, if I understand it, the general majority of the people listening can understand it. Very well done. And then my question was touched on by Celsius Loans. Maybe I didn't fully understand. You said Celsius has already requested to extend their exclusivity, and I think you threw out the question: do we want that? In other words, is that something that we think is a good thing? And I didn't quite understand that, because from my side of the elephant, they're just burning through so much money, and by giving them more time in exclusivity, doesn't it more or less continue that same burn of cash?
Yeah, but I believe it depends if you believe what I think the game is. The game is to extend exclusivity, do the bidding process. And the risk to the bidding process is that we all argue, and then we've got to wait for the examiner report. And the longer we wait, we go into next year. That's the risk right now. And so would that process speed up? Well, maybe not. Maybe there is no way. But as long as if we could get ad hoc groups to agree, and the bidding process continues, and then the examiner, and then the court agrees that if everyone's settled on a process, then maybe it doesn't need to be settled in court. Wait for the examiner report, and we can get this done this year. But that's unlikely to happen. What's likely to happen is Celsius will get their exclusivity extension. The custody side will be, and earn and withhold and everything will be settled in court. That will wait for the examiner report in December, and then the bidding process will start this time, probably early in January or something like that, is the more likely outcome.
Unless your plan is successful, where all ad hoc groups are in agreement and a united plan can be presented to UCC in the court. Is that what I'm understanding?
That's what I'm trying to help everyone understand, and about abundance versus scarcity, and if we can get there. But my challenge is, how many of us are listening to this versus how many people are creditors. So I don't want to give you false hope, but I'll keep trying to make that happen. But the odds are low. But I also wanted to let you know that even if you don't get what you want, on the other side of this, if we can win that bid, put together the vision. If we can achieve that, it would just be this march to victory, of this incredible story that will go down in financial history. And you would have been the people that were part of it.
I'm like super thankful you got my vote, 100%. I don't know if you saw that tweet today from Texas that is now having FTX and Sam Baker-Fried are now under investigation. I don't know if you saw that.
I didn't see that, no.
That was tweeted out a number of different tweets and different accounts. That the Texas, I don't know which part of the Texas legal system has announced that, but they are reviewing FTX, FTX and Sam Baker-Fried for I don't know exactly for what, but you might want to check into that.
Okay, thank you for the heads up. Who's next?
Thank you very much.
Okay, let's bring on Al.
Hi, thanks, guys. Yeah, totally agree on the abundance versus scarcity points being made. Yeah, also in relation to the Texas securities investigation, I think that's come out of the Voyager case. So what they're saying, it might be a cause to stop SBF from buying further assets, or at least one of the articles I saw, I think the Barron's one mentioned that. Yeah, but yeah, my question was in relation to funding and into BF Global. So if you're doing a raise on BF Global on the Bank to the Future platform, what does that give exposure to? Is that mainly the Bank to the Future platform and technology, or is it any kind of? Does it give any exposure to previous raises that have taken
Yeah,
place?
I've got to be very careful because that is actually a solicitation and securities offering, and that should only be made to those that are suitable with full disclosures.
Okay.
And so what we will be doing is we'll be creating a disclosure to those that are suitable to be able to invest. And then those disclosures and all that information will meet the requirement of what we need to do in order to do a securities offering. But to help you understand a little bit about Bank to the Future, we're essentially, it was created as a way of getting exposure to the growth of the whole industry by pooling together those that wanted to invest in companies that were doing really innovative stuff and diversify by lowering the amount that they have to invest so that they could, a typical VC makes 10 investments to get one success, and the other half, blow up and the others just chug along. We've significantly outperformed that, but the business model at Bank to the Future is that whenever investors get distributions like tokens or dividends or exits, we get a fee. Or if they IPO, for example, when Coinbase IPOs, we had 5% of the shares from those that invested as a fee. When Bitstamp was acquired, it's a 5% distribution. When Shapeshift turned into a DAO and they gave tokens to shareholders, it was a 5% distribution. So we earn revenue from the success of all of the companies that everyone's already invested in. And so there is exposure to everything we've done in the past and everything we do in the future. So the reason I wanted to put shares like that in the fund is because I believe that the way the fund succeeds is by having a big proof of work play, which is Bitcoin mining, a big proof of stake play, which is GK8, all of the other assets that we're invested in that we gain entitlement to, any of the legal settlements, the compensation for all the pain that we've been put through, and then a diversified play across the industry, so that as long as those are managed well and we have good management teams, we get exposure to the growth of the industry if the industry recovers from here, which I believe that everybody's here still believes in. We've just been put through a lot of shit, but we still believe that the industry is worth coming out on the other side. Otherwise, what are we doing here? But even if you want to do that, just take half of your funds, whatever's left, and you can ride on that journey anyway through the fund.
Great, thanks, Simon. Yeah, so I've used Bank to the Future before. Invested in Series A and Celsius as well. So yeah, because I've heard a few people obviously questioning in terms of BF Global what equity value would be in there and how that's measured. But obviously, I know you've invested in over 100 companies, so I suspected your answer might be slightly like that, which is great. But okay, thank you for that.
Pleasure. And yeah, in terms of how it's valued, we'll just create. We know exactly how much revenue and profit we make from the amounts of assets we have under administration. And so it's easy to value because we just do a discounted cash flow into the future based upon significantly increasing the number of assets that we would have. And so that's it's fairly easy to value. That the investment bank that would be deciding on any bids would be putting that through an investment banking model of how to value. It's not negotiation, it's just a valuation modeling exercise, which is we've got a team of modelers and investment bankers that are very aware of how to value Bitcoin and crypto companies because we've been doing it more than anyone else.
Okay, next speaker is RB. RB, can you hear us? If not, let's move to Najanita, sorry.
Hey, how you doing? Can you hear me?
Yep.
All right. I think, Simon, I think you just cleared something up for me. I just want to make sure if I'm correctly thinking about this. That 20% equity that you showed in the slides of the Bank to the Future equity inside the fund, is that a structure of a fund so it gives us exposure to the larger crypto market, like exchanges and all that? Is that a correct way of kind of thinking about it too?
Again, I really don't want to make a solicitation and a securities offering, because this is being scrutinized by the highest levels of power. And the only way I can answer that question is when you appreciate the downside and that this could all go wrong, and there's high risk, there's low liquidity, there's risk of all the things that can go wrong. So I'd rather have that conversation with those that have accounts on Bank to the Future, and have been through the correct process in order for me to make a solicitation. I'm trying to ride a very tight rope between compliance and transparency. It's a very tricky rope to ride, but we also don't want to ruin our chances of having this opportunity because we get something wrong there. But yeah, the essentially we're saying one idea of how to structure this is get the bidder to put some equity in the fund and find a bidder that can benefit from or is regulated and able to offer custody, securities, and loans, and then put all of the business in those businesses, so that we benefit from the growth of the whole industry. And Bank to the Future is a company that already has exposure to the growth of many of the deals we've done in the past, as well as any deals we do in the future.
Perfect. Thank you.
Thank you. Next speaker is Rev Matteo, CM.
Hello, thank you. I've been following Simon for a couple of years, and I don't really have a question, but just to thank Simon for putting in all of the time and effort and energy into kind of helping us out here with this. I really appreciate it, and I just want to let you know that personally, my 100% opinion, I would venture to say that I think Mashinsky would rather see the thing go into Chapter 7 than to not get what he wants. I think his ego is just too big to sort of allow that. And everything that, at least from what I could verify and see from Simon's plans, makes a lot of sense. And I'm 100% ride or die on the Simon train. And thank you so much for just doing all of this for us and trying to help us out. And all, wherever it goes, I think we'll all be better off as people for the trials and tribulations of this, as stressful as it is. That's all. Thank you.
All right, thank you. Yeah, and there's two parts of that. Firstly, this is what I do. This is what I love. I'm an absolute geek. This is what financial engineering is, the game that I've been playing for 2 decades now. But also I've aligned my interests with your interests. So I stand to benefit from this, because I've tried to figure out a win-win-win where I can bring what I got to channeling it all into this, so that if I do well, you do well. And that was really how I constructed it. I don't want you to just think this is just purely altruistic. This is a win-win-win, and that's what I do. That's what I've done for my whole career. I see problems, I try to solve them with financial engineering, and I figure out how everybody can benefit from the situation in the mindset of abundance rather than scarcity. Thank you.
Okay, next speaker is Backdraft.
Yeah, hey, can you hear me okay?
Yep.
Hey, Simon, thanks for taking my question, and thanks for all the work on the plan here. Watched all the videos and just wanted to, I guess, ask a question with like a hypothetical example. So if I had 100,000 on the platform, let's just say $100,000, and we come out of Chapter 11 with the reorg and the plans implemented. and let's just say for easy math, 50% of the coins were available. So then would I automatically get opted in 50% of that balance being 50K would go into equity? Does that happen kind of
Yes, so
by
you'd have
default?
essentially, in its simplest form, based upon all the maths, once the maths has worked its way off, which is a moving target.
Yeah.
But once the formulas are all disclosed, you would end up with your pro rata share of Bitcoin, ETH, and a fund. And that's as simple as I can make it.
Okay, and then the shortfall, how is that represented? Is that equity or a
Yeah,
claim
you would
or
have a fund, and the fund would own lots of assets. Our job is to make those assets as valuable as possible over the next few years to fill your hole. And if we make those assets valuable, then we can potentially fill the hole, and a whole lot more if we blow it out of the pond.
right? And I'm just
So
trying to, so I
you'd
get,
have imagine you logged into your custody account and you
yep,
see you had 100 Bitcoin and now you got 50 Bitcoin, let's say.
yeah, sure.
And then you go across to your Bank to the Future account and you see shares in a fund. You're below 100% based upon the dollarized value. And
Yep,
then we try to, over the next few years, increase the value of that fund until to the point where you have something that's worth more than when you started if we succeed, or everything fails and you end up with a worthless fund.
got it. That made perfect sense. So in my actual account that I log into, my custody account, I would see the 50 Bitcoin, and then I would have some 50 Bitcoin worth of the fund
You just have
in that,
you'd have your pro rata share
right,
of all the funds. So a
which
fund, and
wouldn't
you have
be worth
it
50
wouldn't be
Bitcoin in the
it's
beginning.
no, it's not worth 50 Bitcoin in the beginning.
Right.
We need to create the value by
Yep.
creating more valuable businesses and more valuable assets in the fund.
Right. And then I wanted to build on that with my next scenario because I think you've tried to explain it several times, but I don't know if everyone's gotten it when you talk about abundance. And so now with that 50 Bitcoin that I have in my custody account, I can actually, or sorry, let me say the 50 Bitcoin that's in the Bank to the Future equity fund, I can play with that balance. I can give up some of that to get tokens instead, or I can take some of my tokens in custody and get more of the fund. That's
Yeah, I
what you were
just wanted
talking
to
about.
express if we could put a couple of securities offerings on Bank to the Future and some secondary markets, you can just decide where you want to be. You might want more of the fund and less of your coins, or you might want all of your coins and none of the fund. And as long as we can get the numbers to match up and everyone understands why, because they had full disclosure, they know the token distribution model,
Yep.
they know the fund, what it does, and then they just make suitable decisions based upon what's right for them.
That makes sense. The other question I had was on you had on the slides you mentioned two funds, or sorry, not two funds, but two entities, I guess. One was the bidder, and the second was the fund. I understand the fund. I'm not sure why there would be a second one for the bidder. That didn't make sense to me.
Yeah, so this is a separate thing. We're going to be we're going to be doing a funding round for BF Global because we need additional capital to be in the game, and other bidders
Gotcha.
can do that if
Okay.
they wanted as well.
That
And
wasn't clear on the slides, but now that makes sense.
yeah, so that would be a securities offering to all of our traditional investors and anyone else that wants to participate that qualifies to invest. We're initially doing that just because of the heat. To high net worth and accredited investors, but please don't confuse that
Yeah.
with our ability to offer non-high net worth and non-accredited investors their recovery plan. This is
Right.
just
Right.
us raising the capital to be in the game.
Got it. That makes sense. That's all I had. Thank you, Simon.
Thank you. Next speaker, let's bring on NXS.
Hi, all. Just real quick, I saw on the slides that you're looking to possibly file an S1. Do you have any plans in the future of going public, or could you see any of the entities within the fund going public?
Yeah, that's what I think we need to do. We need to have three. We probably need to have the fund manager probably needs to work with different management teams to try and achieve 4 IPOs. One public company would be Earn, which is what BlockFi are doing right now. They're trying to get their Earn product so that it's available to non-accredited investors, which is a big process that may take for ages. And Sam Bankman-Fried has got a free ride on that because he bought the company for cheap. The other is a mining company. Public companies is I think the right strategy for mining companies. And many others in the community, like Anthony, brought that to the table as an idea that started to make people think differently. Then GK8 is another startup that we could potentially try and get towards an IPO if they can get a growth story. And so I want to create diversification so that some of these can fail and others may succeed.
Okay, that makes sense. And one other question, and this is, obviously user experience and user interface is so important. Creating a very simple product for people to use. How do you see all this technology kind of coming together? Do you see us utilizing the current Celsius app, and obviously it's rebranded somehow, and we're utilizing APIs from Bank to the Future for the securities piece? Like, how does this all come together under one simple, really sleek user interface where it's just fast and seamless and easy to use? Because right now we have a lot of different assets and a lot of different things. I could just see that could be, a challenge. Obviously, that's one of the biggest challenges of bringing this all together.
Certainly. Firstly, you just got to appreciate that there is no fast, easy to use interface with securities. If there was, then you wouldn't get the disclosures and you'd end up with Celsius, where people don't know what they invested in, they're not suitable, and it didn't have the disclosures. So we've worked to put together BFID as the best user interface. There's so much more improvements we can make. But you just have to appreciate when you're investing in sophisticated investment products, there is, just like a security versus usability trade-off, there is a disclosure versus ease of use trade-off that we need to get right. But I would imagine using the best of Salt's tech team, the best of Bank to the Future's tech team, and the best of Celsius's tech team that could be filtered through this process in order to develop that further. But I think, the Celsius app was an amazing interface. It was really good. Then we want to, I think that's perfect for custody and integration with GK8. But we want product people to make these decisions, and UX people. I'm a financial geek, but
good. Yeah, that's my point. I just want to make sure that we
speak more to Sean from Salt. He sees everything in terms of a user experience.
Great, perfect. All right, that's it for me. Thank you.
Okay, next speaker, BitShack.
Hi guys, I love the progress we're making here on Celsius. Simon, the second fund that you're raising, just a quick question on that. Would that be sort of on top of the current valuation of Celsius? Of Bank to the Future, or would that be on the proposed added value of?
I don't want to go through the specifics of a securities offering without being in an environment where I'm allowed to do that. But there will be an offer, and those that have accounts and have verified and certified their accounts will be able to see that offer.
Okay, thanks. That's all from me.
Okay, let's bring on Abracadabra. Can you hear us? Abracadabra?
Yeah. Hi, yeah, I can hear you. Sorry, my better half was talking to me at the time, so I apologise for that. Yeah, I have a quick question. I haven't heard anybody ask it yet, but maybe they have. And it kind of relates to the obviously to the funding aspect of it. And I appreciate you guys don't know the exact answer because there's a lot of hurdles to get through, and so on and so forth. However, my question is this. I believe, and I'd stand to be corrected, but I believe that the price of the assets has a direct correlation to the availability of funds. So that is to say, and I believe, Simon, you've said this previously, if the value of the assets go down, as in, let's say Bitcoin is around 20K today, but by December it's 10K, as an example. And I don't think there's many people out there that believe we've actually hit the bottom of the market, but that we could all be proven wrong, of course. But let's say, for argument's sake, Bitcoin hits 10K as opposed to 20K, and the other assets follow suit approximately. Does that mean that we end up with a potential larger share of the pie? And has anyone done any calculations of that? Because that will clearly impact what funding is required to support this this project.
Yeah, so the data analyst can do that. There's a lot of complex moving parts there. But if you converted everyone's funds, sorry, let's not use the word funds because that's confusing. If you converted everyone's coins to Bitcoin and ETH, and that strategy was followed, then the stable coins would subsidize essentially a crash in the market where everyone gets more Bitcoin and ETH. Because you could buy more Bitcoin and ETH with the stable coins.
Yeah.
If the market was reversed, that trend would reverse. We don't know what's going to happen. But I do want to say there is an element of speculation that is complicated there, that involves some skills in trading. And there are other ways. So maybe we just want to follow what's already worked because the Voyager approach of how to implement a haircut was already signed off by the same teams. And so maybe we just want to follow success rather than reinvent the wheel. But I do think we've got to get very soon to a decision on what we think the optimum way of distributing. And so if anyone wants to put some more thoughts into it, we're going to have to get consensus. I just think I gave all my reasons why I would do the Bitcoin and ETH approach. But also I've seen other better reasons as well of how to achieve in kind without taking away people's speculation on the coins they wanted. It's a trade-off. We just got to come up with something. The community needs to decide how they want it done. And then, at the end of the day, we need to move forward.
Okay. Yeah, I understand trying to, to rather than reinvent the wheel, go over a trodden path. But as I say, and I appreciate speculation, but frankly, there's a lot of speculation going on a lot of these calls and a lot of assumptions being made. So I don't think that's particularly unreasonable. It was just really a question of, I don't know if there's anyone out there that is smart enough to say at this value of coins, assuming we have the stable coins with all of the other assets, this is where we get to a slightly higher percentage, because clearly one of the
definitely
concerns...
that's all data that's known. So someone could put all that into a spreadsheet and that could be modeled.
Yeah. Okay.
You could model that based upon the movements of price and select a price. So there's been some amazing data that's been coming out, and it's just getting better and better and better. So someone can model that.
Okay. That's my question. Thanks for your time. Appreciate it.
Thank you.
Thank you. Can we bring up Kirk Embry, please?
Yeah, can you hear me?
Yep.
Cool. Yeah, no, awesome presentation, and thank you all again for, giving us a path forward and being a positive light for all of us. My question is, hopefully it's simple, is the coins that get converted into BTC and ETH, will those be like actual coins? They're not like kind of like how PayPal or Robinhood does it, where it's just like a kind of an IOU that you own this much Bitcoin, but you can't like transfer it out or things like that.
Yeah, it's not cold storage. If you want cold storage, you have to withdraw them and put them in your own wallet.
Okay.
It would be held in custody, which means you have legal title to them. They belong to you. And
Okay.
if for example, if Bank to the Future went bust and you hold them in custody, then those are your assets. That's the whole point of custody. But the challenge with Celsius is they were commingled and invested, is I think the examiner's going to find. So that creates a legal challenge. But yeah, it doesn't mean you own the key. And one thing that we'd like to do is help people understand some of the risk management rules that I use, which is where we created an online wealth management program in the past. So everyone can put together their own percentages of how much you hold in private key, how much you hold in custody, and how much you invest. That's a decision. And we built lots of educational products on helping people make those decisions. And so at the end of this, I'd love for everyone to be able to make those financial plans and just be the most savvy people in this industry.
Cool. Well, thank you so much. That answers my question.
He's next, Azad. You're on mute. Looks like Azad's muted himself. Anyone want to come up?
This is Michael. Can you hear me?
I can hear you, Michael.
Great. Thank you very much for allowing me to ask my questions. So I have two questions, Simon, in reference to the fund that would be used to fill the hole. It's a very innovative idea, and it interests me a great deal. And of course, I, as many people, are very impressed with your sincerity and your creativity. So thank you for being a part of this process. A couple of questions, though. One is, who would manage the fund? Would you be the manager of the fund? And if so, would you receive compensation separately for managing the fund, or would you outsource that to a third-party manager?
Yeah, let me answer one at a time. So I'm the CEO of Bank to the Future, and my full-time job is to optimize the value of BF Global, so that we could potentially take that public over the next couple of years, and you will have a valuable asset in your fund. I would suggest that I'd be more than happy to work with a fund manager, but I think that should be somebody that really focuses that on a full-time job. Or we could go for what I said. If you do that, then a 2 and 20 model is a proven model for achieving that. If you just want assets that aren't optimized, that just sit on themselves, then we could do the 0 and 5 model that we do at Bank to the Future, and we'd be more than happy to administer the distribution of all those assets as they mature. But I would suggest a professional fund manager on the 2 and 20 would do a better job at maximizing the value of those assets, and it should pay for themselves. But no, I don't want to be a fund manager, but I'd be more than happy to support a fund manager. I've got my job as being the CEO of this, and I like doing the visionary part, the presentation part, the educational part, making sure that we're on vision, on mission. And I've still got my damn third book, which I want to get out in the world, because I think I want to cover this story. And I think that's going to go really, really viral and bring in a lot of people that want to be a part of this story.
Okay, well, that's great. And I think that mitigates to some extent a concern that some people might have with regard to conflict of interest. That given your expertise in the space, you would be able to perhaps provide a list of potential fund managers to the community to consider. But
So that's an HR exercise. So that's just an HR exercise, just like the integration of the different companies involves an HR exercise in finding the right people. That's just an HR exercise.
Yeah, and I think if you provided full data on the various candidates, hopefully the community could come together on who their choice of fund manager might be. So that was my first question. Thank you for that. The second question relates to the benefit that Bank to the Future is going to get by having an influx of very large number of former Celsius customers. And I think that that this is going to be an issue that will come up in people's minds, and I'm wondering how you plan to address that concern so that it doesn't get spin out of control and perhaps derail the process.
The answer that I give is we think we bring a lot to the table. If people don't think we bring anything to the table, then fine. And we're going through, I think, a bidding process, and that bid would go through equity. And therefore, we're offering our equity to try and align interest. And there may be some cash involved in the process, whatever the winning bid may be. And so if you want me on your team, then I'm fully aligned to fulfilling my original vision to our BF Global shareholders, and I'm not deviating from that mission. So we have to align. If you want me, if you don't want me, then we can find someone else, and someone else can win the bid. But I'd love to take this all the way through to the end. I think I've got the capabilities to do it, and therefore, if you want me, then I have to align my commitments that I've made, and create a win-win-win. And if it's not a win-win-win, then let's put someone else in the game. I've given the strategy, and someone else can come along and execute.
Okay, so we've got 5 more minutes. You cool with that, Simon?
Absolutely.
Okay, next speaker is Johan.
Yes, hello. Can you hear me?
Yep.
Yep. All right, Simon. I would like to see if there is a possibility to enhance the initial coin distribution. I think we talked about that the other day already. I have a sense that this fund, if structured correctly, will be a very scarce and interesting crypto asset, and a lot of interest to own it, especially if it's only Celsius creditors that can have access to it. So in order to enable better distribution for people who need liquidity or who is not interested, is it possible to have sort of a sliding scale for the different asset classes of how much of their coins can be converted into equity at the initial distribution?
I think we can achieve that. It's a big mission. It requires a full disclosure document on the fund. It requires a full disclosure on the distribution model for coins, and then security law compliance in order to create that sliding scale, plus the bankruptcy code in order to be able to distribute that security. I think we can pull it off. It's an incredible mission, but the more complexity you add here, the more challenges. Another alternative to that is just everyone agree to Equitable, and you all get your pro rata. And as long as it's in a tax efficient way, you can then have markets where people can do that themselves. There's 2 ways of doing it, really, but we've got our team working on both.
Okay, the next speaker is Cole Mustaza.
All right, thank you. Just a couple of things I'd like to throw in here. I've been listening for a little while, quite a bit of listening actually, and a little bit of talking. Just like to throw one thing in there. My stake is small and it's only an earn, just to let people know where I'm coming from. I would have no tax event or tax consequences if a qualified bidder were to come along and want to distribute my pro rata share of what's left of the coins and such in say converting it for me. Wouldn't make any difference to me. Having said that, I have to tell you, I feel very strongly that forcing a tax event on any creditor, severally or individually, is in it by its very nature inequitable, despite the additional work and complication. I certainly think it's worth it. And I just like to ask one question, just in general and specific terms, based on your experience, Simon. In the event that a qualified bidder comes along, wins the bid, as it were, and part of that bid is a reorganization and a fund to creditors that non-accredited investors in the United States, like myself, because of the bankruptcy connection, are allowed to get into. Would, in your experience, do you think, theoretically speaking, I won't hold you to it, that that an unaccredited investor in the United States like myself, would I be capped at what my deposit, what my balance in the bankrupt company, the debtor company was, or can I add to that investment in future with whoever that successful qualified bidder might happen to be? Thank you very much.
Yeah, don't take this as legal advice, but if you go back to the matrix, you can see what we think non-accredited US can do and can't do. We think you can receive the fund. We think you can receive the initial token distribution. And we think after a 1-year lock-in, you could buy that fund and sell that fund based upon some licenses that we've already integrated into the platform. But, I just want to be, so that diagram was a non-committal expectation of all the research that we've done that we think we can achieve.
So I think that was the final question.
Okay, awesome. What I want to share on that, the way we put the matrix up to give you an idea of the challenges and the things that need to do, but we've already integrated all of that into BF Identity. That's been our lifetime work of integrating so that once you say who you are and where you're from, you do the suitability, you do the tests. You disclose your everything that securities laws requires you to disclose, and then it only lets you do the things, and then you prove it, obviously, and then it only lets you do the things that BFID thinks you can do based upon that. So that's really the benefit of the BFID technology, and it can be integrated into multiple platforms. So that it as I said, I've always held a belief that in the end, regulations become code. And this is something we've been working towards as a reg tech industry. And that is how we ended up in this game in the first place. We tried to help Celsius understand that there is some regulatory challenges ahead, and we can offer our support in trying to make this what it should be. But unfortunately, we had to go through this process and this journey together. But maybe that's a positive. Maybe if we're thinking abundantly, that if we end up on the right side of this at the end, maybe this was the moment that everybody needed to actually understand how to change their financial future and understand diversification and understand the immense pain of what happens when you don't get that right. And as I've always said, I've always been on a higher level of purpose. The only reason I'm here now is because my father lost all of his money in the stock market, and that led me to trying to find out what happened, which led me to investment banking, which led me to quitting my job before the financial crisis, which led to me trying to create a bank and failing, which led to my father remortgaging his house in order to lend me some money to try and create that business. Which led to my wife forcing us to take our last bit of credit card debt and go to the first Bitcoin conference in the world, which led to me publishing the first published book in the world to include Bitcoin, which led to us failing at that and changing securities laws and creating this platform, which led to the growth of what later became a multi-trillion-dollar industry by funding those companies by the industry for the industry. And wouldn't it be awesome if at the end of all this, we ended up creating what we originally tried to create all that time ago, but the technology didn't exist and the regulations weren't clear enough, that we created it through by creditors, for creditors. And I think that there's some kind of destiny and purpose there. When my father sadly passed away the very same day that Celsius put on the pause, I became the 21st largest creditor, which happens to be my lucky number. 21 million Bitcoins was what I believe is a part of the story. My father's lucky number was actually number 7. He was the 7th son of the 7th son, and my lucky number was 21. On the day that I had to actually speak with Alex, the hotel moved me to room 721. And I believe there's some kind of guidance here. I believe that this is something that we have to create together. And I think that regulators really do not want everyone to be on the wrong side of this. I think they appreciate that there is criminal things to go after, but let's not let that get in the way. And let's see if we can put this together wherever that journey ends up. Let's travel it together. And as I said, I always end in the same place. We are alive at the most interesting and exciting time in financial history. Some are going to get hurt, some are going to do really well. But I'll stay with you side by side to try and make this something that we can do well out of. And if it all goes wrong, I'll be blown up beside you as well, but it will be side by side. So thank you, everybody. And we're going to do one more video to complete the 7-part video series. The most important thing is that you bring your energy to this. There's an amazing community here of people from diverse range of backgrounds. My fear is that there's a bunch of people that haven't watched these videos that don't know that this exists, because there's 300 to 600,000 creditors, and Celsius currently owns the process of communicating with them. So please do support in trying to get this content out to those that need it. Like it, share it, subscribe, and I'll see you tomorrow on the tax side without tax advice. Thank you.